This is Derek Prall with American City and County Magazine. I'm here with Chiquita Banks, a Georgia-based tax lawyer who helped write Georgia's production incentives. Chiquita, could you please explain for us the different types of tax incentives governments offer production companies?
Sure, sure. Thanks for having me, Derek, and
Absolutely.
American City and County.
Sure.
There are four basic types of tax incentives that governments offer to spur economic development across the board and specifically film and television incentives.
Okay.
There's the refundable tax credits, and that's exactly like it sounds. After you have spent a certain amount within the state, you have a tax credit that you can get on your tax return, and those dollars can then be refunded to you by the state. So, for example, let's just say that I only have a tax liability of $100 in the state of Georgia for 2013.
Hmm.
However, I have a tax credit worth $1,000. That means that the state will pay to me and refund to me $900 after I've satisfied my $100 tax liability. So, the very first and probably one of the most widely used tax incentives are refundable tax credits.
Okay.
Then you have what's called a transferable tax credit. And a transferable tax credit means that you have a tax credit, but the state won't refund the dollars to you or pay those tax credits. So that means if I have $100 in tax liability, but I have $1,000 of a tax credit, I can then take the extra $900 of tax credit and I can transfer that over to you, Derek. So
Okay.
it's an interesting way in which to have a tax incentive because it's the state saying we want to encourage economic development and we want to encourage that industry in our state. However, we might not necessarily have the dollars to give $900 to Chiquita, to Derek, and to several other individuals or companies.
Sure.
So what the state will do is set up a transferable tax credit whereby third party taxpayer and a third party purchaser can arrange to transfer the tax credit for a set amount of dollars. So that's always really good because that starts not only spurs the industry that the state is trying to encourage, but it will also spur a relationship between myself and you because
Sure.
you're purchasing the tax credits from me.
Sure.
So
Sure.
that's probably, I would say that that's also very widely used, a transferable tax credit.
Okay.
And then we have what are called rebates and grants. And these aren't necessarily specific to state taxing authorities. These generally come from the governor's office or the secretary of state or just another governmental authority other than the state's Department of Revenue. And these are just cash rebates and cash grants the states will give to spur economic development. So, for example, in Virginia, the Virginia's governor's office has up to $100,000 per production that they'll give for a film or a qualified television production to come and film within their state. So that you don't often see that just because in this particular economic time, states just don't have the funds to give away just to spur economic development or an industry. So those are few and far between that I've
Okay.
seen these days. But cash grants, of course, are what taxpayers and production companies and what we like to see because after we've, gone to a state and we've invested our funds to get back a dollar for dollar on that investment or just dollars to go towards our project, that's always really good for taxpayers. So if you can go to a state that has a cash grant or a cash rebate, it's wonderful for private sector and for private industry. And then we have the fourth type, which is non-transferable and non-refundable. So that's basically an incentive that says, if you get this tax credit, you have to use it. So if you have $100 in tax liability, but $1,000 in the tax credit, you can only use up to $100 of the tax credit in this particular year, and you may be able to carry it forward and use it in other years. So California is very notorious for having those types of tax credits, and it makes sure that there's local investment and that local industries and local vendors are taking advantage of that type of tax credit.
Okay. So, why should governments offer these types of incentives?
I think that the most important part and reason that government should offer these types of incentives is because it makes your state friendly to that type of industry. So if we're looking for production incentives, and that's what a majority of my practice focuses on, if we're talking about production incentives, for example, the state of Georgia in 2008, they just increased their production incentives and the production tax credits. So immediately there was a huge shift in the state, and there was a shift towards more films and more productions and more television shows coming into the state to film. And what that says to production companies and to the industry at large is Georgia is friendly to production. They're friendly. They're willing to put their money where their mouth is and work with the private sector to bring those revenue dollars to the states for the state's local vendors. So I think that one of the most important reasons is that it makes the state welcoming and friendly to the private sector. Then it also helps to grow a base in that particular area. So for example, in 2000, the difference between 2008 and 2013 and the production company base here, we have a lot of production accountants. We have crew, we have studios that are being built because those individuals and those private sector companies know and understand that the climate in the state is friendly and welcoming to production companies. Not that they're giving them a break, but they're making it more feasible for these types of, for this industry to come and invest dollars here in the state. So I think that that's really important. It helps to build the base, helps to build education for the various vendors and individuals that were here before and are here now, and it makes for a more stable economy and industry within the state.
Okay. So you mentioned Georgia, but what are some examples of some other locales that are seeing successful economic returns right now?
You know, I think that Virginia is really doing it right. They started off with a smaller program where they were allowed to either between rebates and tax credits issue up to $25 million worth of incentives on a biannual basis. And this was a few years ago. Well, just recently, they performed an economic impact study and had a study performed by a consulting company. And they found out that they had a multiplier ratio of about 11 times the dollars that were invested. So that's interesting. And because of the growth that they've seen with the program, you know, they had Lincoln there. They've had some AMC productions there. They've had productions such as Killing Kennedy. It's a great state where they've invested in their program. They started off small and they've kind of grown, and apparently in this next legislature they plan to increase their cap and have more than the $25 million. And I think that they're just a state that's doing it right. They not only have the refundable tax credit, but they also have the cash grant too. Of course, industry and production has been wonderful in Georgia. So I you know, there haven't been enough studies that can prove it, but I can tell you that my practice is wholly focused on it, and it was not 5 years ago, you know, to be quite honest with you. And I've seen every major broadcaster, every major film company institute and do some type of production within the state. So it's really been interesting to see it go from, you know, kind of the little known Deliverance and films of that nature that was filmed in the state years and years ago, you know, over a decade ago, to now we have, you know, large television shows, The Vampire Diaries, Black Entertainment Television. They do several television shows here. So I think Georgia is another state that's doing it right, investing and making sure that their state film office knows the various locations. They know about the mountains that we have and the coast in Savannah and the urban sprawl within the city of Atlanta. So I think that, you know, Georgia's doing it right. Louisiana, they have been hands down probably one of the most successful programs. They not only have state incentives, but they have local incentives in Shreveport and Jefferson Parish. And these are incentive programs that are easy for any production company or someone like yourself or myself to find out more information, so you can count on those incentives being there when you get there, because the information is online.
Hmm.
They have dedicated locations people and dedicated film folks that are in the state at all times. So I think Louisiana's done an excellent job. New Mexico, of course, California and New York, and then Illinois. I think these programs have really have gone above and beyond, and the film offices that they've had in these states, these various states, they've gone above and beyond to make sure that production companies know that their states are open for business.
Okay. So what are some factors that states and municipalities should consider if they were to enact some sort of incentive, if they don't already have one, or if they want to
Yeah.
expand it?
Yeah, I would think the very first one off the top of my mind is the type of incentive.
Okay.
So if you want to spur growth and you want to have television and film within your state, but you don't necessarily have the coffers to just give away cash grants and or refundable tax credits, you
Which
might want to
is
consider
most
something like,
everyone.
which is most everyone right now. Exactly.
Yeah.
I'm even surprised that we still have 4 to 5 cash grants and rebate states that, we should probably move to those states, Derek, you and I. But you probably want to consider something like a transferable tax credit,
Okay.
and make sure that when you're instituting a transferable tax credit, such as the state of Georgia's tax credit, that you put a floor for how much you can transfer it. So, for example, under Georgia, under the official code of Georgia statutes, it specifies that in order from Chiquita to transfer and sell $1 of tax credit to Derek, I have to sell it for a minimum of 60 cents on the dollar.
Okay.
So right there, that makes sure that there is no type of fraud or collusion, and that it's an arm's length transaction between myself as the seller and you as the purchaser, because initially you have to have a floor for what you can sell the tax credit for. So I think that that's one thing that the states want to consider. The type of incentive, whether or not there are dollars to just give away to encourage. And you also want to consider such things like, do you want to have a CPA audit or some type of due diligence review where you have a third party individual reviewing the expenditures and the books and records of the production company to make sure that whatever number they put on their tax return, that that's a good number. So I think that that's really something that a lot of states want to consider and think about when they are instituting or thinking about revamping their current credit program. And then finally, you have to think about it, just as a state and local tax professional and tax attorney, I always have to think about these things. You really want to think about, if you don't currently have a program, if spurring investment in production and this industry will decrease your investments in other industries such as manufacturing or software. And I think that a lot of states oftentimes don't get the opportunity to make all of those various assessments when they're sitting down and focusing on spurring investment and economic development in one industry. So, you have to put on all your hats when you're thinking about this as a state and consider all of the various outlets and ways in which you can develop an industry within your state.
Okay. All right. Well, I think that about covers it. Thanks a lot for all of the information, Chiquita. It was really helpful.
Thank you. And hopefully I looked right into the camera. I'm kind of bad with that. I jump around a lot.
No, everything was great. We really appreciate the information. Thanks.